My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today my special guest is Brian Alfaro, and he is zooming in from Houston, Texas. And Brian is the Director of Investor Relations of a very, very successful real estate syndication company, and that is Headway Investments. And these guys focus a lot on multifamily properties, especially around Texas. And at the moment, they've got $500 million in assets under management. So that's all great. But what I'm excited to chat with Brian about here today is he's the kind of guy that really is very good at raising capital. He's the director of capital raising for the company. And he's also very, very good at setting up systems and processes for doing that. So a lot of folks are in the capital raising business. Not everybody's as organized as they could be. So I think we're going to come away with some really good insights today from Brian. So welcome to the show. Great to have you.
Thanks for having me on, Dave. Longtime fan of the show. I love the show. Lots of nuggets I've taken over the years. So appreciate you having me on finally.
Well, thank you very much. So Brian, give us a little snapshot of what Headway Investments looks like today. We're recording this in, I'm losing track of the months already, May. Oh my God, we're almost halfway through the year already. May 2025. What does the portfolio look like? What do you guys focus on? What's your buy box?
Yeah, we have as you mentioned, about $500 million of assets under management, which is crazy. Our goal is in the next 10 years is to try to get to that $1 billion mark, but we're a one deal at a time kind of company. Going into a year, we set goals, of course, but we know whether it's one deal and no deal or 4 deals, we try to make sure we're finding best in class investment opportunities for our LPs, of course, and then of course for ourselves because we're putting our own money in this deal. So right now we're focused on primary markets in Texas, Houston. That's our backyard. That's our home. We know it really well. We're really comfortable there. We're vertically integrated. We self-manage our assets that are here in Houston. We like San Antonio a lot. Feel like there's a lot of distress in that market in particular. So we're seeing some really great opportunities from a basis standpoint, properties that are priced really well. And then we like Dallas as well. It's kind of the golden child of Texas. Everyone loves Dallas. All the private equity loves Dallas. I'm kind of staying away from Austin right now. Great market, but they got beat up pretty hard with cap rate acceleration, I should say, not compression since 2022. So we need that market to correct. But we love Texas, Houston, Dallas, San Antonio is a big focus.
All right, very good. So so 500 million assets under management, translate that into how many different properties do you guys have? What do they typically look like? How many units? I
would say the average property is on 150 to 200 units, typically 1980s and up construction. We've got some assets that are much newer, 2020 and up, and then we've got some stuff that's much older, 1960s properties. So it's kind of all over the place. Really, we go where the deals are and where the market's at. Sometimes the market cycle puts you in a position where you can take great advantage of some newer, higher quality assets, and then sometimes like today's market, in my opinion, I think it's a great opportunity to buy value add because cap rates aren't compressing. So the only way to force appreciation is through a value add strategy, in my opinion. So they're kind of all over the place. We focus on definitely core cities that we don't buy in the tertiary markets sort of outside of Houston and some of these other markets. And then we're looking for value add multifamily. So there's got to be some sort of value add component. That can mean there's cosmetic value add that hasn't been renovated in a while. There's room to push rents because of that. There could be operational value add, meaning the management is just not doing a great job. Maybe they're absentee owners or they're out-of-state owners and they're just handing it off to a third-party manager and not really squeezing as much juice out of the lemon as they should. Or sometimes there's also value add, or what we're calling financial distress right now, where we're finding deals where sellers are sort of forced to sell. They're in special servicing. Maybe they've got a bad partnership. Maybe they bought in 2022 on floating rate debt and their 3-year term is up and they have to sell because they can't refinance. That's more of a different type of value add. That's more financial distress. But those are really the types of deals we're looking for. And across the portfolio, it's about 40 projects. Some are smaller when we were getting started, 50, 60 units. And then we've got some bigger ones, some 300 units as well. So, yeah.
How long has the company been going for?
Since 2018.
Okay. All right. So you kind of came on early days with the company because I think you've been there for 5 years, correct?
Well, I've been in 5 years. I've been here for about two, actually, two and a half,
Okay.
give or take. But the company was started in 2018 after our CEO said he had been investing in real estate since 2011.
hmm Okay, cool. Very, very cool, Brian. So you're the head honcho when it comes to investor relations and raising capital. What do you guys find works best today, 2025, for generating new investor leads? I'm sure you've got a very good stable of existing investors, past investors. Referrals are always great. But outside of that, for generating new blood, what do you find works best for you guys?
Yeah, the question. If I had an answer to it, Dave, the secret sauce. I probably wouldn't be on podcast talking about it,
Well,
right?
yeah, there's no secret sauce, but there are things that tend to work better
Sure,
for you
sure.
than other things.
What
Yeah.
what I like what I like to tell people when I get asked that question, especially from newer potential capital partners or newer syndicators, is there's not really like a secret like one. There's not like that one thing like
Yeah.
just do this and all your capital raising problems are solved. What I have found over 5 years of doing this is you have to do everything all the time. And what is
Yeah.
everything, right? Everything could mean being on a podcast, setting a goal for yourself to be on a certain number of podcasts on a monthly basis, on a quarterly basis, on an annual basis. That's getting you some good PR, right? The goal could be showing up to in-person events. I love low leverage events because they're high impact, right? Everyone
What
loves
does that mean? Low leverage, high
low
impact.
leverage means going to an in-person event and I might only have time to talk to five people, right?
Got it.
But
Yeah.
those five people I made a really great impression with. I went an inch wide, mile deep. I wasn't trying to speed date and hand out as many business cards as I can, right? I want to get to know each person and see if there's an opportunity for me to add value to them, whether they're an LP or a vendor or a co-sponsor or a fund manager. And so they're low leverage in the sense that I don't have unless I'm on stage, which I do try to do as well. They're low leverage in the sense that I can only talk to so many people. High leverage activities to me and these are things that we do, are social media, for example, right? That's a high leverage activity. I can write a great post, shoot a great video, set up some sort of system to reach out to people on Facebook, on LinkedIn, on Instagram, and reach hundreds of people a day, maybe even thousands, maybe even hundreds of thousands, depending on how viral my content goes. Right? That's high leverage, but I would argue that it's lower impact because there's a lack of a relationship. There's something about being old school, shaking hands, kissing babies, as they say, that gives you a little bit more momentum when it comes to getting somebody to part with $50 or $100,000. So we kind of do it all. So as I mentioned, podcasts, in-person events, hosting in-person events at our properties, going to other conferences, and then doing the things online that a lot of people are probably doing, being active on LinkedIn, being active on Facebook, and just trying to leverage social media.
So, Brian, tell me a little bit more about those in-person events that you do at your own properties. What would be an example of one of those that you've done relatively recently? What was the occasion? Who did you invite? How did it kind of work out? How did you leverage that to potentially raise capital?
Yeah. So one of the things I like to do is, I kind of have a talk track when I'm on the phone with an investor, and I like talking about sort of next steps, especially if you don't have a live deal. We're getting off the call, things are going great, and then people are like, "What's next?" Right? It's like, okay. One of the things I like to talk about is our in-person events if they're local. Some people are not local. I'm talking to somebody in California, it makes it tough, but if they're here in Houston or they're in Texas, I'll bring up that we do quarterly property tours, for example. So one of the things that we do is on a quarterly basis is we will invite all existing investors who are interested, everyone that's in our investor database and sees our emails and is following me on social media. They can come and tour one of our assets and see a real live deal. It's not open for investment. We're not soliciting funds. It's just hey, we bought this deal a year ago, 3 years ago, 2 years ago, whatever it is. Let's talk about how it's going. What is sort of the good, bad, ugly? Let's pull back the curtain. Let's show you some classic units. Let's show you some units we've turned so you can kind of see the difference. Let's have the manager stand up in front of the room and talk about the numbers. What is rent? What was rent when we bought it versus what is rent now? How has that impacted returns? Have there been any challenges? Do we have to pause any distributions? Were there any capital calls? Just being completely transparent about what's going on with the asset. We have found that doing that, and no matter how small the crowd, we've had some that are, 7, 8 people, and then we've had some that are bus tour style where there's 50 people on a bus, right? And no matter how many people, we found that they're high impact because there's something about, again, people seeing you, meeting you, shaking your hands, meeting your team. I think it's just as important because I'm awesome. I'm good at talking. People like me, generally speaking. and you might feel comfortable, partnering with me and writing me $100,000 check. But I'm not the one in the office every day doing all
Right.
the work, right? I'm not
Right.
doing maintenance. I'm not answering calls. That's our team. So to me, the ability to have them interact with our regional supervisor, have them interact with our property manager, have them interact with our maintenance, and then get to see the property itself, that is extremely high impact compared to just posting a video online.
Very cool. Did you say you do these quarterly?
We do.
I think that's really, really smart. So, and what do you typically see? So some of them have 7 or 8 people, other have a busload, 50, 60 people. Let's say you're averaging 20,
Mhm.
25 people per event. What does that typically turn into for you business wise, like tangibly? Do you get a lot of re-ups, a lot of reinvestments? You getting referrals from that? Well, it's customer satisfaction, obviously, as well.
Sure.
But what do you kind of see as tangible
A
outcome?
couple of things. I think referrals have been big. What I try to encourage when I talk to people or when I send them an invite is I always say, hey, bring a friend, bring somebody that you think might be interested in this. And we have had that happen. At least one person every time, usually 2 or 3, but at least one brings somebody that who has no idea who we are. They're not in our CRM. They've never heard of us. They're interested in multifamily. They're interested in passive income syndication, and they're just kind of come along for the ride. So it's sort of opening their horizon, and there's still a long sort of process to get them over the finish line, but they're now in, right? They like what they see, they like what they hear, they want to get on the list. So that's a big one. We're also definitely getting, I would say, more buy-in, which is really hard to measure. You like as just like kind of nerds, we like to real estate guys, we like data. I like to measure like what type of impact something has. And it's really hard for something like this because if I had a great call with you on the phone, Dave, and I invite you to my property tour and then you come check it out, now we've had 2 touch points.
Exactly.
Right. So we had a great call. You're probably reading some, if not all of my emails. Maybe you're watching my content. Maybe you're attending my webinars, again, high leverage activities, right? But now you're coming to an in-person event and you're getting to meet me, shake hands with me, see that I'm not, psycho and crazy and that everything I said was happening at our company. You get to see some of it happening in person. So I think that second touch point is super important because too many people in investor relations or in capital raisings, they get a lead, whether it's online or in person or whatever, and they have a call with them and it goes great. And then it's crickets. There's no follow up. There's no nurturing. There's no invitation for coffee, lunch, in-person stuff. Again, low leverage because you can only talk to so many people and have so many coffees and have so many lunch. So we try to think of these activities. What are some activities we can do where we can invite 10 people, 20 people? It doesn't have to be 1,000 people to really have that second or maybe even that first touch point. So referrals, secondary touch points. And then we have found that when we do these, that it increases the chances of them investing in the next project. I don't have like a hard number for you. I wish I had like, we have a 57% increase in closings if you invite them to a property tour. I don't quite have that yet. Maybe on the next podcast.
But anecdotally,
but
you can tell it helps. Yeah, for sure. It can't do anything, but
100%.
I think that's really, really smart, Brian. Thanks for sharing that with me. So you're also a systems and processes guy. If you don't mind sharing, what are some of the systems and processes you set up when it comes to capital raising or investor relations or both?
Yeah, I learned the hard way, sort of coming in, that if you don't have systems and processes set up, this is impossible. There's so many people you meet at conferences and leads you get online that they're just going to all fall through the cracks. So one, I think base level, I always tell everyone is you have to have a CRM. I'm a big proponent of having a place where everyone lives. You keep notes, you update all your everything on there, right? So we are big fans. I love Active Campaign. That's a really popular one. I use that for years. We're currently using Go High Level. That's another really popular one. I'm very familiar with both of them. And it's just really simple things. You don't have to be like a technology expert an automation or an AI expert to really set these things up, but it's really a place where you can add your contacts, right? Name, email, phone number. Are they accredited? Are they not accredited? When you schedule a phone call with them, updating your notes. Again, if you're doing 506Bs versus Cs, having data of you showing that those touch points you've had with your investors is really, really, really important. So a CRM is an absolutely non-negotiable. I think that is the most important tool anyone who's into capital raising can have. And then you can get really granular and nerdy about like what types of systems within that CRM do you set up, right? What types of automations, what types of reminders, what types of follow-ups, what types of drip campaigns. I mean, you can nerd out on the whole thing to really, again, the goal is to nurture your investors.
So it's super important because I agree with you 100%. And myself, I'm not as good at follow up as I'd like to be, that's for sure. So, what kind of drip sequences, what kind of newsletter sequences, what kind of webinars, what kind of regular communication do you guys do to your list to keep those, like you call it, that high leverage, low personal touch type thing, but that consistent communication going out?
Yeah, two things. So one, if I've spoken to somebody on the phone and we've had our what we call like our introductory call,
Yeah.
they get tagged with something, a specific tag in our CRM that will automatically add tasks to my calendar to follow up with them after a certain period of time. Typically, I like to do 90 days. So if you and I have a call today, Dave, and it's a great call, I add you to our investor list. I'm going to tag you, and then I'm going to get an automatic reminder in my calendar to touch base with you after 90 days. Now, it doesn't mean it's a phone call. It might be a phone call. It might mean you don't answer and I leave a voicemail. It might mean a text. It might mean an email, but it's something that's personal, showing, hey, the goal is for you to not forget about me. Because if you forget about me, you're very unlikely to do business with me. And there's a lot of people doing what we do, right? So it's very competitive out here. So the person who stands in front the most is going to probably raise the most amount of capital. So that's one for anybody I've spoken to. But for people that I haven't spoken to or people that are newer into the system, we definitely send automated drip campaigns email wise. Now, we don't want to, the thing that I've learned is there's such thing as like too many emails, and then there's not enough emails. And then there's kind of like a perfect spot, and it's totally subjective. Some guys send, in 3 emails a day for the 30 days. And I'm on their list and I'm like, holy cow, this is crazy. And then some guys do, once a week, right? So I kind of follow the one we follow is when you're first entering, you're going to get 1 or 2 a week. It's just sort of letting you know who we are. So just kind of a basic drip sequence is, who's Headway Capital? Who are we? Because you got to know the company, and then you got to know the people, right? Who's the CEO? Who's myself? What do we do? Why are we doing this? Because I think the why is super important. And then we start talking about our business. What is, multifamily syndication? How can it add value to you? How is it for you? How is it compared to investing in the stock market and REITs and different things like that? So sort of a 5-step email campaign that comes out over the course of several weeks that gets into your inbox, a couple times a week. And then as far as off the cuff sort of nurturing things, we do a monthly newsletter, which a lot of people do, right? Just high level what's going on in our company,
right?
Any open deals, and then market updates. I love market updates, sort of nerding out about where's the treasury, what's the Fed talking about, what are we seeing in the market, live data, right? And then we'll do I do send one weekly update, usually on Mondays, just letting them know, here's our upcoming events, any webinars, any in-person events, any live deals open, and any replays. So the email also has replays from the couple weeks before. So we do a monthly webinar, and that replay webinar goes out as well. So if they missed the webinar for some reason, they can watch the recording.
So I love marketing stuff, so I love to nerd out about this stuff. The monthly webinar, is it kind of the same thing every month, or do you have 4 or 5 topics you can kind of rotate through, or is it deal specific, or all of the above?
It's a mix. So last year I was doing most of the webinars myself, and I was picking topics, which is great. But where I've started to kind of pivot to is leveraging other people's knowledge as well. So I've been inviting guests on this year. My big focus has been inviting guests. So every webinar we've had for the last 5 months has had a guest. It wasn't me as a primary speaker, with the exception of one. So I do a quarterly multifamily market update, and it is just me nerding out for an hour on a bunch of data. And it's usually our highest attended webinar. So apparently people like it. But I've done,
you got a lot of other number nerds there. That's great.
Yeah, but we've done one with a CPA, we've done one with an attorney, we're about to do one this next week, is a 1031 exchange versus DST, deferred sales trust. So that's again a vendor coming in, and then we're going to have a cost segregation expert come on the month after that. So we're inviting these experts because I'm not an expert at all these things. I understand them, obviously. But I think it's more powerful to invite somebody who's an expert to come on, and that also shows the strength of our network.
Smart. Love it. Brian, time flies. So if people want to connect with you, if we only had one place to send them, where did you send them? LinkedIn or to your website? What's the best place for people to connect?
I'm pretty active on LinkedIn. Follow me on LinkedIn. Look me up. First name Brian with an I and last name Alfaro, Alfaro. I'm pretty active. Add me as a connection request. Let me know you heard me on the podcast, and I'd love to chat.
Awesome. Well, Brian, thanks for sharing your expertise and your input. I admire what you guys are doing. I love what you shared about the in-person events and distinguishing between those, high touch versus low leverage type things versus the opposite. I think that's really, really smart. And I love the systems and the processes that you guys have set up. So keep up the good work.
Thanks, Dave. You too. Thanks. Great job on the podcast. Appreciate you having me on.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.